This is where we need to be aware. People right now are kind of in this complacency mode. They're like, well, a lot of people are nervous, but they're not prepared and they don't know what to do if things start to break down. And the whole point of you and I talking about it and sharing this analysis is so people can say, hey, listen, if it starts to break down, you're best to step aside, protect your capital, or find a strategy that can profit from a collapsing market, because this could get very, very difficult. This could be a financial reset that ruins, a lot of retirement plans and marriages, and it's not healthy to go through this type of financial stress. Could be a very big stressful environment.
Stocks have been ripping higher lately. Will this momentum continue, or is this just a dead cat bounce? Let's find out with Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. But first, a shout out to our sponsor today, iTrust Capital, an IRA that offers 35 crypto assets and 1% trading fees, the lowest in the crypto IRA space. If you're over 18, want to open a new account with cash or roll over an existing account, click on itrust.capital/David to learn more and get started. Chris, welcome back to the show. Always good to see you.
Hey, thanks for having me, David.
You have a new TV show. We're going to talk about that. This is a surprise to our listeners and viewers who know you very well, because you're not a movie producer. You're a technical trader. We're going to be talking about the markets, but branching out to new endeavors is always appreciated and notable. So let's mention that near the end of the interview. So stay tuned. We're going to be talking about Chris's new show. Chris, let's talk about what's going on with the S&P 500 first. Big run up over the last really couple of days, ever since the 27th of October when it bottomed. And then there's this huge run up. We're going to be talking about the Russell 2000 in a bit as well. That's had a huge pop, or a big pop over the last 2 days. But overall, the trend for the Russell has been down. But let's do the large cap stocks first. So sure. The S&P, this big run up since the 27th of October, if you can pull up a chart. First of all, what was it reacting to? And like I mentioned near the beginning, is this momentum going to continue?
Yeah, I mean, really, it's just an oversold. At this point, it's just a technical bounce. And, it was very oversold last week. And we're really just seeing an oversold buying back phase. We're seeing, I think, a lot of people who are short starting to cover their shorts. When we look at the short-term price action, the key thing with the indexes is if there's ever a price gap, gaps almost always get filled. Today, we have a huge price gap in price. And the last time we saw a big price gap over here, the market eventually had to come back and fill that gap. And so I'm expecting we're going to see some type of pullback over the next couple of days to this level, but gaps on charts can be seen as an exhaustion move. Price usually has to come down and fill. I don't know why, but almost 100% of gaps on the SP 500 get filled at some point. Maybe the market makers, there's standing orders. I don't know what it is, but we always look at gaps. If there's any gap at the opening bell, you can either buy the gap down, you can fade the gap if it's a gap higher, but huge gaps like this, especially when we have like news. Yesterday, we saw the markets rip higher in the afternoon with heavy volume. That excitement, that emotional wave carried over to today, making this big gap, and it's pushing higher. So this, to me, is an emotional move. When we look at the volume ratio on the New York Stock Exchange, everybody's just piling in, buying everything they can, more or less hand over fist. They don't care what they pay for it. And that is usually a sign that this is a news-driven emotional move, and is most likely going to be given back. And we can see here, there is a series of lower highs, a series of lower lows. I mean, just visually, this isn't anything out of the norm. It's been a pretty strong pop, almost 5%, but we've seen these pops over and over again here. But not only, just with this correction, we can go back to all these other ones on the way down. These are all 5 to 10% pops. And that's what happens in a downward trend. Believe it or not, some of the strongest rallies are during downtrends. And it's just like this. You get these powerhouse short covering, knee-jerk reaction, buying action in the markets. And at this point, it's really just a bounce. It'll be interesting to see if we can get some momentum, if it can hold this level or build a bullish chart pattern, like a little bull flag on the chart, and then send us higher into the end of the year. Seasonality-wise, this is a bullish time of the year. So we'll just have to see if this is a bounce or the start of a new uptrend before, we get too excited.
generally speaking, does the time frame in which the bounce happens, does that matter? For example, let's say it bounces 5% over the course of 2 weeks versus the course of, let's say, 3 days. Would there be a difference in your analysis then?
Yeah. The faster something moves, something that goes straight up usually comes straight back down. If it goes up on a 45-degree angle, takes a long time to get there, it's sustainable. It could stay there forever and just keep going higher. So, and that's, that's volatility. When we get a high volatile market like we're in now, we have these really sharp drops. We got these super sharp rallies. That's volatility, and because they're sharp drops, we're getting sharp bounces, and it's just ping ponging. Now we got a sharp bounce, so we're probably going to have a sharp pullback. So one leads into the other, right? And the quicker something moves, especially if it's based around a news event, the less you can trust it going forward.
Okay. And basically, you don't think this run up is going to be sustainable then because of how fast it's moved up?
I think it could pull back for a couple of days or trade sideways. I would actually prefer to see it hold its ground or pull back a little bit and then rally up to, the July highs, or maybe even, the 2022 highs by the end of the year. There's potential that we could have a year-end rally that is pretty strong. I would love that because it's great opportunity to the upside. But again, right now we're in limbo. We're just waiting to see if the downtrend is going to continue, or if we're going to actually see a year-end rally, like a bottom here, get formed and then start a new uptrend.
We did speak about a month ago, and you were mentioning the same thing, how you can expect, or one can expect a year-end rally. Can you walk us through that rationale one more time? Again, you've outlined why on a longer-term basis the stock market has been on a downtrend. I'm just wondering why you think it'll pop back to higher levels by the end of the year.
Yeah, I mean, from a few different reasons. First of all, we've had a very strong rally coming out of beginning of this year in the last October. It has formed a nice, I would say, somewhat controlled pullback, a multi-wave pullback. You could say this is a potential bull flag, which actually points to higher pricing. So the overall pattern, especially if you look at the weekly chart, this is still a very strong pattern. Let's take a quick look at the weekly chart because it does kind of lay it out a little bit cleaner. You can see the market we had a bear market in 2022, put in a bottom. It's now rallied, and now it's pulling back. And this pullback really is just down to this breakout level. It is kind of testing that as support, and we're seeing a very strong bounce off that this week. And so this has potential to push back up to the highs from this year, or back over here, put in maybe a double top, or maybe break to some new highs. So that is one reason. The chart is still bullish when you look at the weekly time frame. And then just seasonality wise, if you go back 20 years, 30 years, whatever, more or less the end of October is usually the low in the markets, and we tend to see a rally into the 1st of January. It's just a seasonality play. People are in a good mood. Usually for some reason, the markets sell out in October and cleanse themselves, and it's new people willing to buy and hold stocks, and that's what keeps the market going up. So the charts and the season are both reasons why there's a good chance that we could see a nice multi-week, potentially a multi-month rally going forward here.
I wonder if the entire market is going to follow this pattern that you just described. Can we take a look at the Russell 2000, for example, the small and mid-cap stocks? A very different chart pattern over the last, 6 to 11 months, year to date, versus the S&P 500. So are we going to expect the same kind of pop by year end for the mid caps and small caps?
Yeah, so the mid caps, definitely something I've been watching and talking about recently, because they are testing the lows. They kind of broke down to a new low we haven't seen in a long time. If the stock market does bounce to the year end, we'll most likely see this rally back up to probably the upper end of this range. The small cap sector, or the small cap index here, this is the Russell, tends to lead the overall stock market. So the fact that they're breaking to new lows, other than this week's really sharp bounce, is not a good sign. We saw small caps kind of break down before the major indexes. They have a very bearish pattern. So this is a move down. This is a bear flag pattern. It points to much lower prices going forward. Doesn't mean it's going to happen right now, but the overall pattern is bearish, and it is definitely underperforming. The fact that it's hitting, a new multi-year low here, versus the stock market, which is the SP 500 and NASDAQ, which are still quite a bit above those levels. The SP 500 and NASDAQ are equivalent to trading up here. There's a huge disconnect. Money is not wanting to go into, high growth stocks, and they're definitely struggling right now. And it's not a good sign. But this sector, this group of stocks could rip higher to the upper end of the range if we have a year-end rally.
You mentioned that the small caps usually lead the large caps. Why is that?
Well, it's just speculative money. I mean, it's the when people are really, really bullish and we're in a strong bull market, people literally want to jump into the fastest moving things. It's like you either buy gold bullion, which is a slow moving beast, or you go buy penny gold stock. I mean, that the small caps are like the penny gold stocks of the market. They're like, you want to get into these because they can move really fast. If you think the market's going higher, you want to get into them. So the fact that nobody's really wanting to get into these leverage plays is telling us that, a lot of money is very nervous and they do not want to move into these risky plays, because when they sell off 50 to 80% and can take decades to recover sometimes.
Would you say then that the price action of the Russell 2000 is more indicative of real market sentiment this year than, let's say, the S&P 500, which was, as we know, driven up by the Magnificent Seven tech stocks?
Yeah, for sure. I would say this is exactly what I kind of feel the overall market is doing. I think the SP 500 NASDAQ are a little heavy weighted in technology, which has really had a good pop this year. So it's kind of masking the bearishness in the market, but the Russell is clearly saying, hey, look out below. We're testing these levels. Nobody's really dumping tons of money into the market. Nobody wants to take the growth. The venture capital money has completely dried up. I mean, valuations for companies have dropped. We're not in a very good environment for the markets.
Yes. You have a series of original charts to show us. I'm excited to present this to our audience. I don't believe you showed these particular charts before, at least not on my show. This is I'm talking about the sentiment cycles. We've talked about your sentiment cycles many times before, but now you're overlaying them, where you're overlaying the chart with real life examples, which is I find very useful. So let's go through some of these examples.
Yeah. So from a really high level, I'm going to go through some examples that have gone full 4 stages, and then we'll go to a couple here that are in mid stages in the opportunities. So for example, this is the ARK K ETF. I bring it up just because almost everybody took part of this phase. And just to quickly recap, there's 4 stages to the markets. Stage 1 and a stage 3 are shaded red because they're volatile, they're choppy, they're unpredictable. They are just a very difficult time to trade or invest. A stage 2 is a bull market phase, which we all love. And then a stage 4 is a bear market or a financial reset. Both of those trends are green because they are trends. And it doesn't matter if something's going up or down. If it has got a big trend behind it, we can make money from that. But let's take a look down at the stages for the ARK ETF. So we've gone through the stage 1, and then it got into a stage 2. And then, of course, COVID hit, and we had almost everybody pile into the stock market. People who had no interest in the stock market, but they bet on football and hockey games, they all decided, hey, getting into the stock market. And we saw this huge blow off phase. I mean, the returns in this ETF, absolutely insane to the upside. But then it went into a topping phase and a complacency phase. People thought it was going to continue to go higher after this pullback, but it broke down and it went in through the full stage 4. And now it is going to take a long time to recover. In fact, I think it's trading in the 20s right now, high 20s. I think it's going to probably end up in the $16, $15 share level. So there's still another 50+% downside, I think, to the ARK ETF. So a lot of people look at this to be like, oh, this is a time to buy. It can actually still get lopped in half from here. Even a penny stock could still fall half a cent, which is 50%. So I want to keep people be aware that just because it looks low, don't think it's a bottom. So that's kind of the one scenario a lot of people live through. On the kind of commodity side, we've got natural gas. It did huge blow off phase, it topped out eventually here and then broke down. And that's another bubble that has now kind of gone through its full cycle. And of course, if we move over to the stock market cycle, you can see where we are. We've had this huge run up from 2009. We've had the blow off phase. Again, everybody got into trading stocks and options. The market has pulled back. We're in this stage 3 topping phase. And eventually this could unwind in a very, very big way. And I kind of drawn a line, not saying this is exactly where it's going, but if we were to look at the SP 500, there's a lot of room for us to wipe back out to the below the 2020 lows, maybe back to 2015, 2016. This is, looking at a 50, 60% market correction. And the reason I bring this up, because a lot of people are very complacent. They do not believe something this big or bad can happen, but we have seen this happen over and over again in various commodities, sectors. In the stock market itself, it has done this many, many times. 50 to 85%, depending on the index, these type of stage 4 declines take place. So this is where we need to be aware. People right now are kind of in this complacency mode. They're like, well, I a lot of people are nervous, but they're not prepared and they don't know what to do if things start to break down. And the whole point of you and I talking about it and sharing this analysis is so people can say, hey, listen, if it starts to break down, you're best to step aside, protect your capital, or find a strategy that can profit from a collapsing market, because this could get very, very difficult. This could be a financial reset that ruins, a lot of retirement plans and marriages, and it's not healthy to go through this type of financial stress. Could be a very big stressful environment.
Yeah, there's a couple follow-up questions on that. The first is that I've noticed that of these charts that you presented, most of them happen over a time span of a couple of years. Is that a coincidence, or does it usually take a few years for the entire life cycle to play out, Chris?
Yeah, for a lot of these are over the same time frame, simply because I like to look at the stock. The stock market to me is like the ocean. You got a rising tide, almost all stocks and assets go up. You got a falling tide, all boats go down. Most things go down. So they do move generally together. They can stretch out. Like, for example, we could go back here and take a look at the SP 500 and look at the the monthly chart. If we go and take a look at this, we had the 2000 tech bubble, and then we had the 2008 financial crisis. And then, of course, we went into this massive, huge rally that so many investors, they've never really experienced a multi-year correction or anything very serious, really, yet. But if we go back in time and go back to the 80s, the last time we had one of these massive rallies that we've just experienced, it took 12 years for the SP 500 to come back, 16 years for growth stocks. And I feel as though we are very close to that same style of setup, that we are in a 2000 style setup. We're going to be starting a commodity super cycle. It's going to be very bullish for precious metals again. The stock market is going to fall out of favor. And we're going to have this big reset in equities, and we're going to see different assets start to become more favorable. But, these patterns happen over and over again. And, if we take a look at the gold chart, for example, the gold chart is just starting a new super cycle. I believe we're going to see gold hit about 3,500 or so, potentially over the next year and change. If this market goes through this wave where we're probably going to see gold and silver and miners pull back because we're going to have the stock market sell off, but then precious metals kick into high gear and they take off, and the stock market will flounder for a while. So I think we're seeing the beginning of something very, very exciting in the precious metals space. We're not quite there yet. We're still, I think, a few quarters away from potentially gold finding a bottom and the stock market having a big waterfall sell-off. But we've seen this pattern happen over and over in gold. And when we look at the gold chart, we can see we have the same type of pattern happen. If we were to just look over from the 2000 move, we have a huge run up. We had the blow off phase. Everybody got into gold. It put in a top. It broke down. It's been dead money for many years. And now it's just starting the launch pad to take off to the next one. But we've seen it even before that. You go back to the 80s. It had the huge phase, a huge blow off move. It put in a top. It broke down, and it was dead money for like 20 years. So all the cycle, these stages happen not only on the monthly chart, but it happens on 1 minute charts. Like everything goes through this life cycle between being dormant to an uptrend, a topping phase, a downtrend, rinse and repeat. The key is understanding where all these different asset classes are, including like real estate and what you're interested in, and making sure that if you're going to invest in something, make sure it's in a good stage or you can benefit from the stage that it's in. Because these stages, a lot of these stages I'm showing you here, these are multi-years. So if you're on the wrong side of it, in my opinion, you're buying real estate in the last year or two, it's going to take you a long time to start seeing new highs in your home value because it's going to reset. Homes are going to go down. It's going to take a long time for you to see real growth versus 2 or 3 years from now. You move in, you buy properties, and they're just going up, every year after that. So buying when there's, a good opportunity to get into these is really important. Knowing where we are in these cycles, and I think this, picture yourself in most of these cycles here. We're in this red zone. There's not much more opportunity. It's a high risk opportunity. We want to see a reset, and we eventually want to try and pick things up while they're down in a cycle low. It doesn't have to be the bottom. It could be later as it's confirmed that it's starting a new stage 2, we get in. It's not about picking tops or bottoms. It's about knowing where we are in the cycle and then riding these trends, and they can last many years. So that's kind of like the high level view of where I think we are in the stock market. It could be dead money for a long time. And we're going to see probably the rise of precious metals in the next, probably this coming year is what I'm thinking. It's going to be pretty exciting.
Can you just go back to the gold chart? Can we start that from 2018, please? And just want to pick your brain on the chart action. That
Sure.
looks to me like we're in phase 2 or 3, the complacency mode. Correct me if I'm wrong, but if you just take a look, if you just perhaps start from 2017, that looks like a basing pattern, stage 1. And then now we've entered stage 2, and then we're in the complacency mode, double top, and then we're about to go down. Is that a different way of interpreting this chart, or am I not picking up something here?
It's a very short-term view. I mean, you can look at it a few different ways. I believe we're going to see gold pull back. I think we're going to probably see it come back down to this range. Again, this is the monthly chart, so it could pull back for 6, 7, 10 months. Stock market flushes and sells out. And then eventually we're going to, I think, see this take off to the upside. In the grand scheme of things, you could say that, yeah, maybe this is a base, this is a blow off phase, it's topping out and it could come back down. Anything is possible. But I'm looking kind of at the bigger overall picture. When you put it together with what all the other assets are doing, this really is just kind of the start of a run. And it is naturally always going to be crisscrossing through here. And if we were to zoom out on gold and just kind of, take it back here, I think eventually we're going to see, this work itself up. And eventually it's going to go parabolic and have a topping phase and sell off. So if we look back to 2000 high was right over here. We were testing these highs. This level here, just before we started this mega cycle to the blow off phase, to me is equivalent to right here. We're kind of testing this high, these highs that we saw back over here. So we're right at the beginning, but it still might pull back and consolidate before we go to the parabolic move. This here is a very strong chart pattern long term. Short term wise, as you just said, it still looks a little bearish. I am expecting it to pull back. So it's all about understanding the time frame you're looking for, and you're kind of expecting some move to take place. Yeah, I don't know. A financial reset to me is like we're just going to see complete chaos in the markets. We're going to see stocks sell off. So the values are going to get reset to wherever the next bottom is. Real estate's going to sell off. Currencies are probably going to have a huge reevaluation event, whether the dollar screams higher. I just say a reset is everything is going to just kind of go haywire. And they're going to just reset to wherever the next kind of everywhere is brain length wise, where things should be valued.
If you think that real estate is going to reset, I just wonder if that's going to have broader implications for inflation, because if real estate prices come down, I wonder, because you mentioned to me last time you have your family has had a history of working in real estate. Do rents usually come down in large cities if, let's say, the overall price index of homes go down? Is there a correlation there?
Yeah, I think there's always a delay in how things move and interest rates and stuff. I think rates are going to hold up and probably stay high for a while. I think we're going to see a lot of people start to have problems servicing their mortgages, especially here in Canada, because a lot of mortgages you have to renew and get a new rate every 3 or 5 years. So as that's coming up for renewal, people aren't going to be able to afford the homes. Perfect example, I was talking to somebody. He said, "Hey, do you want to buy a home?" I'm like, "Not really." But he told me his story, and he had bought a home in April 2020. His 3-year mortgage is coming up for a renewal. He's paying 1.9% right now. He's going to be paying like 6% when it comes up in April. He goes, "I don't make enough to pay my mortgage payments when it comes up for renewal." He's like, "I literally have to sell." And we're in a tough environment. Believe it or not, it's actually more difficult to sell a home right now. We're not in a feeding frenzy anymore. And so that wave's going to kick in. And of course, if he can't afford to own the home, then he's going to have to rent. And it's going to happen to a lot of people, which means there's going to be a lot of renters coming into the market. So it's going to keep, I think, the demand for rent fairly high for a while. Eventually, it'll teeter out.
So ironically, a home bubble pop would probably be bullish for rents. Yeah, that's an interesting dichotomy for a little while. Yeah. Well, that's unfortunate for a lot of people. Do you think foreclosures then were coming?
I do. I think it's going to be a bloodbath. I mean, it's going to be an amazing opportunity. It's all about keeping your gunpowder dry and not, to me, it's more about not jumping too soon, because I've been looking at a lot of properties. I always look at them. But I don't want to buy anything right now. I'm just waiting for the evaluations to reset. I still think we're a year or 3 away, really. So you just don't want to jump too soon, because I think there's a lot of downside potential, especially in Canada, for real estate. Although it'll totally bleed over into the States, because the reality is majority of people in Canada or North America in general are living paycheck to paycheck, and we're always overextended. And when things get difficult, people have to sell stuff and homes get sold, and people, it just leads to a big kind of reset in real estate pricing.
Yes. All right. Well, let's finish off on your positioning, and then I want to talk about your TV show. Your outlook for the markets you've explained. What does that translate to in terms of positioning? First of all, how much cash are you in right now relative to the overall portfolio?
Yeah, we've moved right for our trading investing account. We're right back into cash. We're just collecting daily interest until we figure out if we're starting a Christmas rally or if the bottom's going to fall out here, and if we're going to start to see a new major downtrend take place. So we are in limbo. Everything is kind of in limbo. Gold is stuck up in resistance. The stock index just popped this week into resistance. The dollar's been trading sideways. It could break down or it could scream higher. Everything is like just pausing and building up energy. So we're like, okay, let's wait and see where things are going over the next week or two. And then hopefully we'll be able to get into a position and take advantage of the year-end sell-off or rally, whatever comes next.
Right. Well, if for the viewers watching, if you want to learn more about Chris's trading strategies, click on the link down below and learn more about what he does in his methodologies. We'll get into that in more detail next time. We are running out of time today. Now, in terms of the sectors and asset classes that you like the most and least right now, so you've given us sort of your longer term outlook on stocks and gold and commodities. But what about, let's say, if I were to just take the next quarter, your outlook for the next quarter, what would be the asset or thing that you're most bullish on for the next 3 months, Chris?
Ooh, that's tough.
We can extend the time frame if you like, if it makes more sense to take a yearly view.
I mean, I would move to something conservative. No, I think that the US dollar index, being along the dollar, I think is a low volatility play during a time where there's a lot of craziness right now. Even if it pulls back, it's not going to be a huge percentage drop. I do think eventually, as things get more difficult in the economy and stocks start to move lower, the dollar is going to scream higher. So to me, it would be the dollar play. It is in one of the strongest trends right now. It's got a strong bull flag, and it points to higher pricing with limited downside.
And your most bearish asset, same time frame?
I'd probably just say growth stocks, like small cap stocks, ARK ETF, anything that's like high growth. The small cap is going to potentially have a lot of risk there.
What let's say a Fed pivot change your mind on growth stocks. Let's say if by March or something, the Fed says we're done raising rates for good. In fact, we're going to cut rates. Would that change your outlook?
No, it's only if price changes direction. I don't really care what the Fed does. So I'm sure it'll change the market trends. I'm sure we'll see some hiccups. But if they say they're done cutting, they also see that there's tough times coming, and it doesn't just mean the stock market's going to go up. I think they're going to only be cutting when there's blood in the streets, and that's generally not a good thing. So,
why is it that you're involved in a TV show now? You're a trader. You're not a movie producer. Tell us about your involvement in this new series that you're a part of. And yeah, my bigger question is why?
Yeah. No, well, there's a few different reasons. So I'm getting involved in a show called the Goldilocks Mission, which I can just kind of pull up a shot here. So we're doing this Goldilocks Mission. It's a 9-part sci-fi TV series. It's based for educating kids, the age of 14 to 25. That being said, it's an adventure show, which I love adventure shows. I watch with my 11-year-old son all the time. The show is based around all the good shows that we've watched in the past, like The Goonies, The Matrix, Indiana Jones, Stranger Things, all kinds of different stuff. So it is going to be a really great, entertaining show, but it's all about to educate individuals about new technologies, clean energy. It's got a really cool story twist to it that is going to just have you on the edge of your seats. And it's about spending quality time with your kids and watching a quality show that's not dark and dreary, and but that's inspiring, that's exciting, that motivates people to take action and all those things. And it's also kind of buried in the subtext is it's about trying to save the planet. The story is about saving the planet, but it's also ways that we can take part in the world to kind of make it a healthier, safer place for everyone. So there's a bit of a climate kind of change woven into the background to help reduce climate anxiety, because it's a big thing that a lot of people are worried about. It seems so big that no one can actually, one person's not going to make a difference. But if a lot of people do a few little things, it can make a huge difference. And so that's what it's all about. It's an entertaining story, bringing together, families and kids, and really setting the tone that if we all help each other and we all do things to help the planet, it can be a pretty amazing journey. So that's what we're doing. And so we're trying to raise funds to get to the writer's room to bring the show to life. And so people can pledge. We're trying to raise $100,000 in the next 8 days from when you and I are recording this. And people who pledge and help bring the show, they can become part of entertainment history on the cast list. If they want to be in the show or have their kid seen in an episode, there's a pledge for that. If you got a cool tech product you want seen. So we've got some really creative ways for people to not only help bring this to the market and create education and entertainment for kids and families, but there's also some really cool kickbacks and rewards for individuals helping out to be part of this mission.
And where are you planning to air this?
So John, he's the producer. He's done 10 different films. He's got them on Netflix, Prime, Sony Pictures. So it'll eventually, the plan is to get it on all the major stations. That's his specialty. He focuses on this. He's actually got one of Canada's top grossing films. So, I mean, we've got the right people to do this. So yeah, the plan is to get it on the major shows and become a Netflix kind of, darling.
And how much do we have to pledge to be a part of the show to have some benefits as well?
Yeah, you can pledge from $1 all the way up to there's limits depending where you are, but all the way up to about $13,000 is a top pledge that the platform Kickstarter that we're on allows. So you can do $1, you can anything in between. We got all kinds of really cool, interesting stuff.
Okay. And do you have, I guess it's probably too early in terms of deciding on casting, but do you have an idea as to who you want to bring on in terms of talent?
Yeah, so if you go here and you watch this little teaser reel, you'll see the quality, you'll see what's involved. So we've got some of the cast on there that we want to be in the show. But on top of it, we've got a lot of professionals working with us. If I just come down, take a look at this. We've got Dr. James Hansen. He's the climologist from NASA. Tom Rand, he's of the Arctic Ventures. He's huge into clean energy. He's part of what we're doing here. We got Andrew Weaver, another climatologist. We've got Karen Nyberg. She's a NASA retired astronaut. So we've got a whole team behind this, which is super exciting to see everybody involved and to bring the most realistic, real story entertainment, and how we can all try to, entertain and educate people on just little things that we could do that just not only make us feel good, but also help kind of the planet to stay where it is and not, go off the deep end in terms of climate change and things like that.
Well, excellent. Good luck on this project. We'll follow up in the coming months to see how it progresses. We'd love to be a part of this, Chris. So we'll put a link down below. Make sure to click on the link to pledge if you want to see Chris be a part of a movie instead of just trading stocks. A man of many hats and talents. I appreciate you. Thank you for coming on the show today.
Thanks, David. Take care.
Thank you for watching. Don't forget to like and subscribe and follow Chris in the links down below.